right, cool. We'll roll into this then. Welcome, everybody, to another episode of TMI with Mark and Troy. Today, we've got our good friend, Chris Nicol. Chris Nicol owns Elite Insurance, and I've known you forever.
Yeah.
I mean, we were neighbors right out of college and in a new townhouse and got to know each other, and you've handled all of my stuff personally for a long time. But Chris, he's the owner and president of Elite Insurance Solutions, LLC. He has over 2 decades of experience in insurance and financial services industry. He remains focused on unique needs and goals of his clients. Chris grew up in Ankeny. He's a hometown kid, played baseball here, and his mom and dad owned a business as well, and that's where he got a lot of kind of his passion for serving others and learned the value of hard work and honesty and integrity. And, he does that in his own practice and taking care of the folks that he serves. And many of those are clients that we have here at Triplett-Westendorf Financial Group.
Yep.
So, Chris, can you tell us a little bit more about how you progressed through your career?
Yeah, sure. So I went to Iowa State University, got a marketing degree, and then got out of school and wasn't exactly sure what I wanted to do. Had a friend and mentor at the time that was a Farm Bureau agent, and I liked everything about him and his family and his profession, and so I thought, this is a good guy to model myself after. So went and became a Farm Bureau agent in his office, actually. Worked there for 11 years, learned the business. At Farm Bureau, they do everything that you can imagine. They try to be a one-stop shop. So they do farm insurance, home and auto insurance, health insurance, life insurance, disability insurance, investments, everything. So I learned every aspect of the business, and as I progressed through that, decided that the independent channel was more of what I wanted to get into, and started going down that path and started Elite Insurance Solutions just over 10 years ago now. So did that with a couple other Farm Bureau agents, and once we got through the first year, we ended up parting ways, and I became the owner and president on my own. So
cool.
Yeah.
So Chris, what type of insurance do you do? Do you specialize in any specific thing, or?
Yeah, so we kind of whittled down. When I left Farm Bureau, we kind of whittled down like what we do into a more niche style. So really, home and auto insurance is the bulk of what we do. We do a lot of health insurance. We work in individual, both under age 65 and over age 65, and then we work with small groups as well. And then we still do the life insurance, disability insurance, and long-term care insurance, but those aren't as day-to-day as the health and home and auto insurance. Okay. So
nice.
Yeah.
So you and I have had discussions about this just personally with my own insurance needs. But there's some unique things happening in the state of Iowa when it comes to homeowners insurance in particular. Can you share a little bit about what's transpired over the last 5 years and kind of how do you see things playing out this next year?
Yeah, so there's a lot of different topics that we could cover in this, but ultimately there's been a lot of challenges for carriers. There was major event in 2020, Duratio. It was I believe the number 2 highest paying claim situation for private insurance ever. And that on top of a lot of hail events here over the last 5 years, insurance companies have really had a challenge to price their products appropriately. And we've seen huge rate spikes. We've seen some carriers decide that they need to limit their business. And then we've seen a lot of changes in the coverages. Some companies are doing, higher deductibles are being forced on people. We're seeing one of the biggest trends right now is a 1% wind hail deductible on home insurance.
Really?
Yeah. So that's a really challenging thing for a lot of people. Most people in 2020 or 2019 might have had $1,000 deductible.
Right.
It was the most common deductible.
Yeah.
And there was certain carriers out there. I think State Farm had a 0.5% deductible or 1% deductible for a long time for any new business, but a lot of companies had not adopted that. And that was one of the first things that companies started adopting when they started having challenges with rates. You'd see, so let me explain a 1% deductible quick. So if you have a $500,000 house, that's the insured value, then you have a $5,000 deductible. If you have an $800,000 house, you have an $8,000 deductible. And typically that is just for the cause of loss of wind and hail. You can have a separate deductible for fire, theft, things like that. So what we're typically seeing now is carriers are pricing their products to benefit the higher deductibles. But with that being forced on you, a 1% deductible is pretty high for a lot of people. It creates a challenge for people there. There's other challenges in the market too. Obviously, price, but inflation. I know we're going to touch on that later, but that's created a lot of rate spikes for carriers as well.
We can talk about that right now because that's one of the questions that's always on my mind. And we serve clients here in Iowa, but we serve clients in other states. We got, a large percentage of of the folks that we serve, our client base is in Colorado, and they saw a rapid increase in home prices. And none of our clients were directly affected by this, but when they had those fires a few years ago, they wiped out all these homes. These people were severely underinsured because the price of rebuilding that home, that construction had gone up so much that they found they didn't have, like, even after the insurance claim was paid out, they didn't have enough to rebuild.
Yeah, so there's been massive inflation, right? And not just it's primarily the biggest jump that we've seen is in the cost of rebuilding homes. I had clients that built a home for $700,000, really nice home for $700,000 in 2019. If they had to rebuild that house right now, it would easily be $1.2 million.
Yeah.
And if you go talk to any builder, the stuff that they were estimating 4 or 5 years ago is 50% less. So if you can just imagine, an insurance company is now having to account for unprecedented inflation. They used to have kind of ticks up every single year, but now it's massive jumps. So we as agents have to not just rely on those inflation adjustments annually. Most policies are going to have 3 to 5% inflation on the coverage A, which is your structural coverage. So if you're at a $500,000 house in 2025, if your renewal's coming up, you're probably going to be at $525 to $550 automatically at renewal. It's going to automatically increase. What we found in 2020 is that was not enough. Okay, so what you're talking about right there with those houses in Colorado, that 4 or 5% adjustment wasn't enough. The spike was so big over 6 months to a year that if you had a loss in that time, it wasn't enough. So there is a coverage that is pretty standard and has been for maybe 6-7 years, that it's called a guaranteed replacement cost endorsement, and it usually has a 25% cushion, so that if you have a massive spike from one policy renewal to the next and you have a claim in there, they will have a cushion of 25%. So, if you have $1 million house, you've got an extra $250,000 of cushion just for that topic that we were talking about right there. So
okay, that's good to know. So some of the folks that we serve, as they're transitioning into retirement, they might find themselves in a position where the home that they've been in may not meet their needs anymore. They're downsizing perhaps, or maybe they're relocating to another city to be closer to children and grandchildren, et cetera. You mentioned new construction and the cost of new construction. We've had this discussion before where finding carriers to accept risk on new construction is much easier because the home's new.
Yep.
But talk about if we're relocating to a previously loved home,
Yeah.
and the challenges of finding insurance and how to navigate that and some of the things that you're seeing there.
So the challenges are improving. It's getting easier to find coverage, but the older the home, generally, the less the insurance company likes it. The easier things are to break down. If the roof is old, if it's 20, 25 years old, a lot better chance of having a leak. If the furnace is 15, 20 years old, a lot better chance of it breaking down, maybe while you're not home, having a frozen pipe, and then having a loss that they would have to pay. So the companies are pricing that in, but they're also changing their underwriting strategies to avoid some of those houses. So I would say there's certain things you can look for when you're out shopping for a previously loved home. I like how you put that. Age of roof is the biggest factor in insurance, I think. Age of furnace is the second biggest factor. And then the neighborhood, the age of the neighborhood, the trees, things like that. There's certain coverages that you're going to want to make sure that you have. The sewer line endorsement's a big one right now. If you're, let's say, local area, if you're in Beaverdale, for example, a lot of older homes, beautiful homes over there, right? But they have big trees in the front yard. Yep. They have some old pipes in the front yard. Roots can grow into those pipes. You're responsible for the city's sewer line from your house to the city sewer. So that's a new coverage that's really become popular and necessary in some of those situations. So we'll see that in older homes. But as far as challenges go, I think we're out of the woods on a lot of that stuff. There was a period up until about 6 months ago where it was really hard to find coverage for older homes. And especially if you had one or two claims, which most people did up until August of 2025. Those derecho claims fell off. A lot of companies look back 5 years.
Oh, okay.
So it used to be companies would only look back 3 years. That's one of the changes that that they made. They said, okay, now we're going to look back 5 years. And now some companies are even looking back 7 years. So in the old world, if you had a claim, in 3 years it falls off, that's pretty easy. You could look back 7 years. It's pretty hard to not have one claim in 7 years for somebody, especially when derecho's on there. So, and we've had massive rain events in 2018. We had 10 inches of rain in an hour and a half.
That was a bad one.
We had a ton of clients with water in their basements. So it's really difficult to not have a lot of claims in Iowa. And then if you're making that change going from one house to another house, it's a brand new policy. It's a fresh set of eyes from underwriting. It's going to make it difficult for you to find coverage sometimes. But typically we can adjust. And that's why I like to be an independent agent is we have multiple carriers. We have multiple rule sets and things that we can sort through.
Cool.
That's cool. So, roof, furnace, and neighborhood are big players in that underwriting decision. When you're looking at roof, what are the parameters that are kind of triggering underwriting issues?
Okay, so great question. So age of roof is the most important, right? So if your roof is less than 10 years old, it's going to be pretty reasonable. Once it gets over 10 or 15 years old, a lot of companies have moved to an actual cash value endorsement on your policy. So in the past, we had replacement cost coverage, okay? And that was on almost every single homeowner's policy that you would buy. Replacement cost just meant if you had a major hail event and let's say half your roof was damaged, they're going to buy you an entire new roof, whatever the cost is minus your deductible. So you had $1,000 deductible at that time, $30,000 roof, you're getting a check for $29,000, okay? Put the new roof on. With this new trend, one of the changes that carriers have made is to go with an ACV roof endorsement, actual cash value roof endorsement. And that, all that does is takes away replacement cost and moves it to a depreciated value, similar to car insurance. Everyone kind of understands how car insurance works, right? If my car is brand new, I bought it for $50,000, and I have an accident in the first week, I'm probably getting close to $50,000. If I have an accident in the third year, I might be getting $30,000. Okay, very similar way that they are paying those out. It's not going to buy you a brand new car, brand new roof anymore. It's going to buy you a depreciated value. So there's a schedule in your policy typically, and it'll say year 5 if you have a claim, here's what percentage of the roof we're going to pay. Year 10, this is a percentage. Year 20, this is a percentage. So it's super important to be looking at if you have an ACV roof endorsement or if you have a replacement cost. I have a lot of clients that will call me, hey, Chris, I got a quote from someone else. The rate is significantly less than what we have. They send me the declarations pages. I have them with replacement cost, and they have an ACV roof endorsement. A huge difference.
Yep.
So
I'm telling you what, this stuff can get so complicated, and that's why I've always worked with an expert like you, somebody who knows what they're looking at, because I want to make sure that I'm not just looking for the cheapest strategy,
right?
Because that might leave me very exposed, and you've always pointed that out to me over the years that if the coverage that is appropriate to make sure that I'm made whole in those unfortunate but still some probability worth covering. There's a probability of outcome, right? And we buy insurance because we're transferring risk, and so you don't want to pay for something that's very unlikely to happen. But these are all things that are potential to happen. I could lose my home. I could get in a car accident. And you just don't want to be in a situation where you think you have coverage, because I have insurance, air quotes here. Right. I have insurance and I'm paying this premium and it's less than somewhere else. And then at the time of the incident, at the time of the claim, you realize, oh, shoot, I wasn't appropriately covered. I didn't understand this. And it can get so complicated with things like this. So how about furnace? Because that was something that caught me off guard. I didn't realize that.
Yeah, so furnace isn't a huge issue unless it's over 20 years old. Okay. Once it's over 20 years old, a lot of companies are going to say, hey, we won't take this on as a new client. We might renew the policy, but if they have a 20-year-old furnace, they're not going to qualify for new policy with us. That's just kind of one of the weed out things. So
if you got a 20-year-old furnace, I think you should get some sort of award.
You're doing something right.
Yeah, it's like, one of those cars that has like 1 million miles on it, and like hand you a plaque. Yeah. And most of them are gone after somewhere between 10 and 15 years. It looks like anymore they replace them. Yeah. Yep. Okay, that's good to know. And then, but the neighborhood though, you mentioned like an established neighborhood like Beaverdale. We think of is a pretty nice neighborhood. It's beautiful, trees. Are there any other factors when it comes to a neighborhood that somebody needs to pay attention to?
I'll talk real quick about rating factors. Zip code, a house in 50021, it's odd, but can be a different cost per thousand than a house in 50023, which both are in Ankeny. Yeah. Very rare that you see that, but definitely a house in Ankeny could have a different rate than a house in Nevada. Okay. The location, the weather patterns, it's way above my head, but the pricing strategy with a lot of these carriers, it's location based off of hail and storm paths. Okay. With that said, the neighborhood thing, it goes back to a little bit with the roofs. So they have new technology, satellite imaging. They will take a picture of the house from the satellite, and if the roof coverage is more than a certain percentage, say 25 or 50% of overhanging trees, they won't write the policy. So, or they'll come to you and say, hey, we won't write it unless you remove these trees or remove these limbs. And think about it. I mean, everything that they do is they want to cover the unexpected. Right. Okay. Now, when you've got a massive oak tree that is overhanging your house, it's just a matter of time before a limb falls on your house. Okay, so that's what they're trying to do. That's what underwriting is trying to do. They're trying to figure out how they can get everybody to be in the same risk pool. And if one person has 0% of tree limbs hanging over and one person has 50%, they're not in the same risk pool. So they're really trying to determine, get probability the same across the board. So, but that roof technology does make it difficult sometimes for us to find a carrier that'll take that house. So
That's fascinating.
That is.
Things that we don't think about when it comes to, well, that's why we work with
Well,
somebody who knows what they're doing.
I'm sure how advanced it's become over the last 10, 15 years with technology.
Yep. Another thing that we're seeing in technology on the auto insurance side of things is apps on your phone that will monitor your driving habits and give you a discount. So almost every single carrier is having some sort of GPS drive technology that monitors. Typically, it monitors your speed, how quickly you take off, how hard you brake, what time of day you drive, and if you use your device for anything other than, Google Maps or maybe playing a book or music, But if you're texting and driving, you're going to get a bad score. So even if you are talking on your phone but not hands-free, it senses that. It knows when the phone is moving, and it'll give you a worse score. But for people that...
It's like having an insurance adjuster in your vehicle with you.
I think I
more like an underwriter. But
I had that, I think, when we switched over to, maybe it was Nationwide.
Yeah.
Yeah, I remember having to drive really good for a long period of time.
Yeah. A lot of the companies...
Makes you aware of it, that's for sure.
Yeah, a lot of the companies were at 90 days. You had to have that app on your phone for 90 days. And then at that point, you could delete the app and not have anyone monitoring what you do, and you could go back to driving the way you were, Troy. But now most of them have switched, and it's got to be on your phone for the life of the policy, and it can change your rate every year. Some of them can change your rate every month. It's pretty crazy.
Time for you to invest in a second phone, buddy.
Those phones.
Troy mentioned the N word. I wasn't going to bring it up, but I kind of wanted to. Nationwide, they may not be appropriate for everybody,
right?
But they're the carrier that I've had for a long time at your recommendation, and I've unfortunately had to use the claim before. But one of the things that I've used the most with Nationwide that I absolutely love is the roadside assistance. I can't tell you how many times I've been either my old truck broken down and they had to put it on a flatbed and take it somewhere. Once I was in Chicago coming back, and it wasn't even my car. I was just a passenger with another guy. He gets a flat tire, gets the donut out. It's flat too. We're stuck in the side of a major highway. And I'm like, no problem. I got this. Called Nationwide Roadside Assistance. They sent out a flatbed. We took it to a Big O Tires nearby. I had IHOP. I look like a hero. And I didn't pay for any of that. I mean, I'm sure it's part of the premium cost, but to have that roadside assistance has been so clutch. More recently, Bree, her Tahoe got a relatively new Tahoe, gets a puncture. And the tire just goes flat like that, and she's stuck on the side of the road. I'm like, no problem. We got this. So I love that. It's been clutch.
Yeah, it is nice having that stuff. Chris, what would you say is the biggest misunderstanding that people have about insurance in general?
So, I would say this: the insurance industry has done a really bad job when it comes to advertising who they are, how to use their products, and whatnot. So, everyone's probably seen the State Farm policy ads would do the jingle, and then you get in a little accident, a little fender bender, and all of a sudden the adjuster, or in their ads, it's the agent is in the back seat of the car helping you out right away.
Yep.
I would say the old school mindset was if you have something that goes wrong, you just call your claim. You just call in a claim. And in today's underwriting world, it really is helpful to not have a lot of claims on your record. One of the worst things you can have is what's called a zero pay claim, because it still can count against you when you're shopping for new insurance. Typically doesn't affect your rate with your current company, but if you have a major rate increase with your current company and you want to go, if we want to go shop that for somebody, if they have a zero pay claim, that can hurt them. So the old school mindset of just calling in a claim, I think is a misunderstanding. I think my advice to most people is do what you would do if you didn't have insurance. And then if you find out it becomes financially uncomfortable for you, then you call in a claim. So there's certain times where you're automatically going to call. Like if you have a house fire,
Right.
that you're calling, right? That's different.
Major.
But if you have, like I had water coming into my house. I think we have an ice dam. I got a roofer coming out to look at it later today. And my initial reaction, probably because I'm an insurance agent, I give this advice all the time, but my initial reaction was not to just call my insurance company. It was to call a roofer, come out, assess the situation, let me know what it's going to cost, see if we can get it fixed on our own. So if I would have just called my insurance company, more than likely it's going to be under my deductible and it's still going to count as a claim in some ways. So that's one of the biggest misunderstandings that I think is in this new world of claims matter. Underwriting is really strict and especially on the homes.
Yeah, I can see that too. I think, and you said it well. I think I just had my attic door in the garage flew up and turned and landed on my on the hood of my truck.
Yep.
And I just remember having the conversations with you prior to that. Like, does it make sense to even file a claim? And at that point, you're paying it out of pocket. But I'm thinking, prior to that, I probably just called the insurance company and said, hey, what's the cost to fix this thing? What's my deductible? Deductible's $500. Will this cost $1,000? Maybe I just submit it to insurance. Right. Say $500. But in the long run, it's probably hurting me on the insurance side, coverage side, or my premium side. Yeah,
I really like the phrase "use your insurance when it becomes financially uncomfortable." Yeah. I think that's super important. And I think in this current world that we're living in, where claims matter so much and underwriting is so tight, understanding how important it is to have an emergency fund that you can rely on for the smaller things. And the bigger your emergency fund, the bigger your deductible can be. And the bigger your deductible, the lower your premium. Mm-hmm. So everybody's financial comfort level is different. So that's why we can't just give broad advice to all our customers like, hey, $5,000 deductible for everyone. That's not accurate. So we need to work with our clients to say, get a feel for what their comfort level is at claim time. If you have a $5,000 emergency fund, let's say, and you feel comfortable with paying $5,000 at claim time, well, you're still probably not going to necessarily have a $5,000 deductible if $5,000 is your limit of what you feel comfortable paying. Because if you have a $5,000 deductible, you probably don't want to turn in a claim until it's $7,500. You don't want to turn in a claim unless you're getting maybe $2,500 back at least, right?
Okay.
So managing that and understanding that and having those conversations is important. Making sure people really put themselves in that claim situation and think about what that's going to feel like and look like and that. But definitely, I think one of the biggest pieces of advice that I can give to clients is your emergency fund can save you a lot of money on your insurance costs if it's big enough.
I got, maybe Troy has another question, but I got one last one that I want to make sure we cover. And this is, I think, maybe on the minds of a lot of folks. You've educated me enough to kind of steer clear of this, but what should folks understand regarding the pros and cons of these low-cost discount auto insurance companies?
I will say this. Many insurance companies use standard iOS forms, okay? So their contract language is very, very similar, if not the exact same. So many companies are going to have to pay the same no matter who you buy it from, okay? But you get to choose the limits of your coverages. You get to choose your deductible. You get to choose your bodily injury limits, your property damage limits. You get to choose those things. So there's a company out there, Progressive, that does the Name Your Price tool, okay? And I don't know if people use that much, but imagine going onto the website and saying, I just want to pay $60 a month for my car insurance, okay? If the standard policy is going to be $120 a month, all they're going to do is go in there and start stripping down coverages, okay? If you strip down your coverages, you're not going to have roadside assistance. You're not going to have a rental car paid for when your car gets hit by when you hit a deer and your car goes in the shop for 2 weeks or 3 weeks or maybe even 4 weeks. You're going to have a really high deductible on comprehensive and collision, or you're going to maybe not even have comprehensive and collision coverage. And then one of the biggest things is your liability coverage. A lot of people think about, the asset that they're covering, that car. The more important asset is your retirement savings, So your bodily injury coverage, your property damage coverage are super important. I think, an old limit was what they call 100, 300, 100, meaning you'd have 100,000 per person for bodily injury per person maximum. If it's over that, you have to pay for it. 300,000 for bodily injury to all the people in the car. So you have two separate limits, 100,000 and 300,000 there. And then 100,000 for property damage. How many trucks are on the road right now that are over $100,000?
Most.
A brand new truck.
Yeah. SUVs, any of those, it's getting up over 100,000 depending on how they are.
Yeah, if you total a brand new, Grand Wagoneer Unlimited edition, that might be 150,000. You just cost yourself 50 grand because you only had 100,000 of property damage. So, understanding where those limits are and understanding how inexpensive it is to go from 100, 300, 100 to 500,000, 500,000, 500,000 as your limits. That's what we try to help people understand. So, if you have $5 million net worth, you should probably also have an umbrella covering the high end of those things.
I'm glad you brought it up. I was just going to ask that question as a follow-up. How do you feel about umbrella policies and the importance? Because you mentioned, you're not just protecting that asset. Like, I'm buying auto insurance to, in case my car gets in a car accident. But if you're at fault and you hurt people or you damage property, it's not just your asset now that you got to worry about. It's all the other claims go along with that. And if you don't have the coverage to compensate those individuals whose property you damaged or who you caused injury to, guess what? You're paying for it out of what? All of that time and energy you put into saving for the future could go out the window.
Right. Yeah. So imagine, let's talk about umbrellas real quick. So umbrella, $1 million umbrella, the umbrella costs have skyrocketed over the last couple of years. Almost every company has doubled their umbrella rates. But a $1 million umbrella can go like that too, So we're writing a lot more $2 million umbrellas than we ever have in the past. We're writing a lot more $5 million umbrellas. A good rule of thumb is if your net worth is $5 million, you should probably have close to $5 million umbrella. That's just a rule of thumb. Obviously, you can never guarantee you're going to have enough for a lawsuit. Right. I mean, if someone caused an accident that, God forbid, killed one of my children, there's no number that you could put on that for me, Right. So, but a $5 million umbrella is not as costly as people think. So, and if you have $5 million in assets, then, it's probably not.
So does the umbrella, does that cover the home, auto, wherever you're at, or how does that work?
Yeah, so with most companies, you're going to have a base policy for every one of those assets. So if you have 3 cars, you have 3 auto policies, or one auto policy covering all 3 cars. You're going to have those base liability limits that we talked about. So you probably need, with most companies, $250,000 per person, $500,000 per accident, and $100,000 of property damage to qualify for an umbrella. And then it'll pick up next dollar over and above that. Same thing when you pair your home has personal liability coverage on it. 300,000 is a kind of an old number that we used to see. That's usually the minimum for an umbrella coverage. And then 500,000 is probably what we write the most. But then an umbrella is going to kick in right over and above that. So
how often should someone review their property and casualty coverage?
Depends on how thoroughly they set it up in the first place.
And not to price shop. I don't mean that.
Right. Yeah.
But am I still appropriately covered
Right. Yeah.
from last year to this year or 5 years ago, et cetera?
So I would say every year is a good rule of thumb, every other year at a minimum. But I would also say that you've got to look at it at life changes. So if you have a child, if you got a big pay raise at work, if you took a new job, if you bought a new house, if you went out and got a motorcycle, things like that. If you bought a boat. So all of those things, any life change, any major asset addition is worth it. At a minimum, I mean, a lot of our reviews aren't sit down and go through stuff for an hour. A lot of it's 15 minutes on the phone, and that sometimes is sufficient. So
Cool. Good. You got anything else for?
One last thing for me, and this, probably you haven't heard a whole lot about it, but do they have any issues with fraud in the insurance companies or in the insurance business?
I wouldn't necessarily be great speaking on that topic. I don't see it in my world very much. I'm sure they have it. I know each company has their own fraud team to try and sniff that stuff out.
I didn't know if that was an issue with carriers or just not really.
Yeah, I don't know too much about that. So.
All right.
Thanks for joining us, man.
Yeah.
Thanks for coming in and spend some time with us. It wasn't that scary, right?
No,
Chris
it was good.
Chris doesn't like public speaking.
No.
This is the closest thing to public speaking we're going to get out of
good.
it.
That's
So
right.
thanks for coming in and spending some time with us. We
That was
appreciate
fun.
it.
Thank you guys.
Thanks, Chris.
That wraps up TMI with Mark and Troy. Till next time. See you
All
guys.
right. See ya.